What's up everybody? Nate here. So 2022 has definitely not been the stock market's year. Month after month, we have seen massive sell-offs in the market, and now it looks like the stock market is about to erase all of the gains that it had from 2021. Meaning we're once again going back in time, except for this time, the stock market is losing everything and going back to where it was back in 2020. Now it hasn't quite lost all of its gains just yet, but it is getting close. We're starting to see more and more investors sell all of their investments off as they kind of wait to see when all of this volatility is going to end. But unfortunately, they might be waiting for a very long time. So today I want to talk all about the stock market. I want to go over what is happening in the stock market right now, how long all of this drop is going to last for, and what exactly I'm doing with my investments at the moment. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's go over the three major things that are keeping the stock market down right now. Number one, we have rising rates from the Federal Reserve and inflation. Now, what both of those two things happening at the same time means is that businesses and people are ultimately going to slow down. This creates a situation for our businesses and economy where there's not enough money coming in. And ultimately that leads to a huge slowdown. Now, what we saw last week was the United States GDP actually fall by 1.4%. If our GDP falls for 2 consecutive quarters, well, that means the United States is in a recession, which means there's going to be a lot less money spending in our economy. Now, the reason the Federal Reserve in particular is affecting the stock market is because the stock market does not trust the Federal Reserve. The Federal Reserve believes that inflation is going to come down based on their monetary policies and that they'll be able to institute all of those without causing a recession. This is known as a soft landing, where they pull a lot of their stimulus and lower inflation, all without causing something serious. Now, the Federal Reserve printed trillions of dollars in 2020 and in 2021, and they're going to continue to print in 2022 and beyond. So that is a huge contributing factor towards inflation, but there is also some other issues, like our supply chain is getting bottlenecked right now because of the war in Ukraine and also lockdowns in China. Places like Shanghai and China are completely locked down right now, which means that businesses that operate in the United States, well, they can't get their goods and services to bring over into the US. That ultimately means that consumers at home have less things to buy, so the price is going to go up because demand isn't going down. Meanwhile, you have the Federal Reserve raising interest rates, which affects the mortgage market and the auto market because now they're going to eliminate even more demand in our economy, meaning that even when the shelves do get stocked, it's going to be difficult for everyday Americans to buy things. That is ultimately why the stock market is a little uneasy right now from the Federal Reserve. Even if they are able to produce a soft landing because of their monetary policies, well, there's a lot of other things in the United States and across the world that are happening right now. We still have a lot of issues with productivity and the Great Resignation here at home. That is making it much more difficult for businesses to produce things. Businesses can't find people, and while all of these Americans are looking for a new job, nothing exactly is happening. Then, of course, we have all of the issues overseas, and the Federal Reserve can't do anything to help those. There are no policies in the United States or from the Federal Reserve that can help lockdowns in China or can help ease the supply chain issues from the war in Ukraine. This kind of creates a doubling effect in our economy because now you have all of those issues not going away, and also you have rising inflation because you don't have a lot of supply. Meanwhile, the Federal Reserve is raising interest rates, making it even harder for people to spend on their credit cards or get a loan. All of that drives our economy, and this is where the stock market believes our economy is headed next. We're already starting to see this because of some business earnings reports. A bunch of companies have already reported earnings for Q1 2022, and a lot of them have not been great. Tech stocks in particular have been selling off like crazy. We saw so many tech IPOs in 2021 and tech as an industry explode over the last 2 years because there was suddenly this big reliance on technology, mainly due to the pandemic. Well, now many Americans are getting out again and they're starting to do other things, so a lot of investors who were using those stocks to protect themselves against inflation and a volatile stock market, well, now they're trading them in. And the reason that a lot of these earnings reports are bad in general is because, well, a lot of those IPOs from 2020 and in 2021 are not really making any money yet. They're taking on huge losses and losing clients because Americans Americans aren't buying their stuff. This happens with a lot of brand new companies, but the sheer amount of investing that we saw in tech IPOs last year alone means that those companies hold a massive portion of the New York Stock Exchange. If a large portion of investors start trading out those stocks, well, now you have a massive stock market sell-off. That leads to a dip that we're starting to see now. And of course, other companies that aren't tech companies are losing a lot of money because Americans aren't able to spend. Inflation, by definition, simply just means that the monetary supply of your country is going up. That means the US government is printing a lot more money. And like I said, we saw that over the last 2 years. But a byproduct of inflation is that prices in an economy go way up, because as the US government prints money, well, they don't just sit on it. They take that money and it eventually gets trickled down to Americans. Americans then go out and spend that money on anything they want. As they buy more things, companies have to produce more. But if companies aren't able to produce more, well, then you run into a problem called stagflation. We are nearing a period of stagflation in the United States where you have inflation going way up and your economic output, or your GDP, going down. This is mainly because Americans have money and they want to spend it, but there's just nothing to buy. And it creates a lot of other problems, because if the majority of Americans can't spend their money, well, the majority don't invest, so they're ultimately going to save it. That means there is no extra money for the stock market and there is no wealth building for Americans. Basically, this creates a really risky situation for our entire economy. Which brings me to number 2. Speaking of Americans not spending money, well, that includes the stock market. The Federal Reserve has recently reported that there is very low liquidity in markets right now, and there is very low liquidity in our US economy. Liquidity basically just means money. It means there's dollars being transferred from one place to another, and we're not seeing a whole lot of that right now. The stock market is worried about this because businesses rely on that liquidity in order to grow. This is exactly what the stock market is for. When you buy one share of a company, you're essentially doing two things. You're betting on that company's future and you're taking partial ownership in that company. That means you're giving them money so that they can start growing their business. That ultimately leads to the value of a company, the amount of shares that they've sold multiplied by the price of each share. But that equity is starting to come way down because people are pulling their money out of the New York Stock Exchange. So businesses don't have enough money to continue to grow either. And you couple that with Americans spending less, well, now sales are lower and the value of companies is also lower. They don't have those investment dollars to continue to grow anymore, which means they are ultimately going to slow down. Investors right now are holding on to a lot of cash. Many of them have been doing this for months because they believe even though the stock market has been tanking for all of 2022, we are nowhere near the bottom. Once the stock market hits its eventual bottom, well, then it can do nothing but go up. This is what investors are predicting and waiting for in 2022. And a lot of them are not buying stocks right now in order to eventually wait out the bottom. Part of that low liquidity is investors selling off their investments and getting cash and then holding on to it. But this is bad for two reasons. For one, we talk about this a lot, but if you're not investing your money and you're simply saving it, well, it's getting eaten away by inflation. Inflation for March of 2022 was around 8.5%, an over 40-year high. So when we see thousands or even millions of investors taking their money out of the New York Stock Exchange, well, it's no longer gaining value. Sure, those investors might be investing in something else, but everything is getting pretty crazy right now. And then the final reason why the stock market is essentially tanking in 2022 is because Americans are loading up on debt. We have seen more Americans over the last 2 years get into homes. A lot of them bought their first homes in 2020 and in 2021, myself included. But that creates a lot of debt because now Americans, for the first time, have to pay a huge mortgage payment, and they're stuck with that payment for a very long time. A lot of the times 10, 15, and 30 years. Many Americans in the housing market are realizing right now that they can't exactly sell their home because interest rates are starting to go up, and they got got in at a historically low interest rate period. We're talking between 2 and 3%. They're not going to see that again, so they don't want to sell their home because of that. In addition, markets are kind of cooling off, so they don't want to lose value on their home and then have to enter the housing market and buy a new home that is overinflated in value, making even fewer people sell their homes. But it's not just the housing market. We're talking Americans in 2022 and in the latter parts of 2021 started loading money back up on their credit cards. And this is dangerous for a lot of reasons. For one, most credit cards come with an adjustable interest rate, which means as the Federal Reserve raises its interest rates, the financial institution that manages your credit card is also going to raise its rates. That means that balance on your credit card is about to get a whole lot more expensive and in turn, much harder to pay off. Americans cut off a lot of credit card debt in 2020 and in 2021, but as inflation has gone up, Americans have turned to their credit cards because they don't have enough money in their normal bank account. Americans need money for a lot of things. They have to be able to buy the goods and services that they need to survive, and a lot of Americans have felt cooped up because of the pandemic that now they want to go out and live again. But many of them don't have the money to meet this lifestyle, so they're spending on a credit card. This is dangerous because as credit card debt goes way up and sets historical records, well, Americans are going to have to put way more money to pay off that credit card. And they're going to have to put more money into their housing payment or their auto payment or any other type of loan that they got out over the last 2 years. And that was a lot, considering the Federal Reserve dropped its benchmark interest rates to 0% back in 2020 and kept them there for almost 2 full years. Americans went out and bought a lot of different things, and while it was really easy to pay for stuff at first because inflation wasn't super high and you had Uncle Sam dollars in your bank account, now it is getting really hard again. So why is that bad for the stock market? Well, they know that if Americans are putting more money into their credit card payments and more money into their housing payments and every other type of debt, well, they're gonna have less money to buy other things, like consumer goods and services, and that's how our businesses survive. If Americans are buying a whole lot less, well, that's gonna be bad in general. You're gonna continue to see lower earnings reports and investors continue to pull their money out of those companies. Nobody wants to invest in a company that is continually showing that it's making less money every quarter. So with all of that said, what exactly is coming next for the stock market? Well, nobody really knows when exactly we are going to reach the bottom. Like I said, a lot of the problems that are going on with the stock market right now are being caused by overseas issues like the war between Russia and Ukraine and lockdowns in China. The pandemic is probably going to be here for the foreseeable future. It might not be that big of a deal in the United States, but other countries are handling it differently. There is nothing the US can do about that. We get a lot of our supply from China and we get a lot of our supply and energy from the Russia-Ukraine region. As long as those two conflicts are going on, then we're gonna have supply chain issues, which means inflation that's being caused by that is going to continue to rise in the United States. There's no doubt. Meanwhile, the Federal Reserve has said they want to get aggressive with inflation. They cannot continue to allow all of this money to circulate through our economy, so they need to raise their interest rates. They want to lower demand and make it much harder for people to get a mortgage and an auto loan and gather more debt in general. Now, that is better for the future of our economy because now you have millions of Americans who are not bogged down by debt, but it's going to hurt in the short term because spending drives our economy. So there's going to be a lot less money circulating around, and I don't see that ending for a long time. Eventually, the Federal Reserve is going to have to go backwards. They're going to have to bring down interest rates again. Now, we're not sure if this is going to happen in 2023, 2024, or beyond, but it will eventually happen. Either the economy will completely level out, so there's no real reason to continue to raise them, or we'll enter recession territory, and they have to stimulate the economy by lowering interest rates or leveling that out altogether. That'll be one of your biggest indications of a recession. If you see the Federal Reserve start to lower their interest rates, that pretty much shows you that you're in a recession. Businesses are doing what they can to increase their supply right now, and people are starting to make a little bit more money because wages have slightly gone up in the United States. That means as people can buy more and businesses can increase supply, well, then you might have an equilibrium in the market. That is also what the Federal Reserve is trying to do, get a good amount of price stability for every single industry. If prices can remain stable, then businesses know what they have to set their wages at. And then people will only be able to buy a certain amount of things. So like I said, you have an equal amount of supply and demand. That will eventually happen as our economy sort of levels out. But it's definitely definitely not going to happen overnight. So this period of selling off is probably going to continue for a long time. So the bigger question is, what exactly should you do with your money right now? Well, if you ask me, I'm not really worried about this stock market crash, and I'm not really worried about our economy going into a recession. And that is because of my own particular goals here. For me, the long term is better when investing. The stock market in the short term is always pretty volatile. Right now, it is extremely volatile, but usually it's volatile anyway. Day-to-day trades are gonna go pretty crazy. They can go up and they can go down, and the same with individual years. But over the span of its entire history, the stock market has always recovered from a crash, no matter how low it's gotten. We saw this with the 1929 stock crash. We saw this with the 1987 stock crash, the 01 dot-com bubble, again in 2008, and of course in 2020. Every single time the stock market has went down, it's always come back up to set new record highs. And this just depends on your mindset, because when the stock market goes down, well, that is an opportunity for new investors to enter the market and start to build some wealth, but at a discount. What I mean by that is fundamentally for a lot of these businesses, there is really nothing wrong. The stock market in general isn't a problem, and the businesses on the stock market are really good companies in terms of value. So more often than not, investors aren't leaving those companies because they're less valuable and they're making really bad decisions. Obviously that definitely happens, but in this case, that's not what's going on. Investors are leaving because they want to hold on to their money and protect it and move it around because we might be headed for a recession. So knowing that a lot of those companies don't really have major issues, well, then they're eventually going to go back up when the stock market goes back up. And since they're so low priced right now because there's a huge sell-off, you can buy shares of those companies at a lower price than you'd usually be able to. And like I said, these are gonna be big companies, and most likely they're going to go back up, so you can start building wealth on the cheap. And for me, I'm not moving anything I have because I have a long-term mindset. This stock market crash is bad right now, but I'm looking 30 and 40 years in the future. Of course, I don't know what's gonna happen then, but I know that my money is still going to be in the stock market gaining value. And there's probably going to be 5 or even 10 more stock market crashes between now and 30 and 40 years. And my money is going to go down, but eventually it's going to go back up. And sure, that's risky. You are never guaranteed to make any money anytime you invest. But is it any less risky than not building wealth and ending up having all of your money getting eaten by inflation? Is it any less risky than selling things right now and then buying back when everything is at a record high price? Again, this comes down to what you value, and it depends on what your mindset is going to be. I can't tell you what to do with your investments because what I'm doing might not make the most sense for you. I just know that historically we have been here before, and the stock market always goes back up. And even if it doesn't, there are other places to invest your money. Markets are growing all throughout the world, so there might be other investment opportunities out there. Obviously, there is a lot of panic right now, and that's what causes a lot of these stock market crashes. Investors on Wall Street see a lot of bad things in the future that could potentially happen, and they start selling off their stocks today. You can avoid a lot of that panic and fear and then eventual pain later if you have a plan in place today and you make sure you stick to it. Stock market crashes are going to come and go, so you just have to prepare yourself for the next one. And always remember why you're investing. For me, that is for my long-term goals. So I don't really care what happens in the stock market today. I only care what my numbers are 30 to 40 years down the road. But now I want to hear from you on this issue. What do you think about this massive sell-off that's going on in the stock market right now? Do you think that the stock market is nearing its bottom, or do you think that we're going to continue to feel this pain for a very long time? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.